You recently posted a video on your channel which is talking about 3 different market catalysts that could light the Bitcoin fuse. Can you talk through what those events are?
The biggest one is the Genius Bill. We haven't seen explosions, but the fuse is definitely lit. We haven't seen so much within the crypto space. As this bill advances and eventually becomes law, these will lead to great things. Stablecoins is definitely going to be a big factor in so many things that we do. Of course, big giants are looking into it. 3 months before the end of the cycle, and it really accelerates until like the last few weeks. That's when things get crazy. As a retail investor, you just have to be in the space. You have to take it all in. Just like any other investment out there, you got to do some homework. There will be institutional inflow into the major chains.
Well, hello everyone and welcome back to the Binance Studios. My name is Jessica, and if you watch crypto YouTube, you will know our next guest. Joining me now, we have George, or CryptosRUs, to share his views on macro, what is happening in the markets, summer 2025 in crypto, and so much more besides. So first of all, thank you so much for joining me today. How are you doing?
I'm doing good. Thanks for the invite. I'm always happy to talk Bitcoin and crypto. So I'm glad to be here.
You recently posted a video on your channel which is talking about 3 different market catalysts that could, in your words, light the Bitcoin fuse. And we have seen some of these events unfold this week. So can you talk through what those events are, but also how you believe they could impact the crypto market and your perception of the impact? Sure.
I think the biggest one, most people already know this, is the Genius Bill being passed by Senate. It's very, very big and significant. We have seen we're not seeing that fuse. We haven't seen an explosion, sort of say, I guess, but the fuse is definitely lit. And the reason being, this Genius Bill Act represents a lot of things. First of all, it really shows that America, the US, is really turning a corner, going away from being very strict and stifling, and really just not allowing any innovation at all in the prior administration and prior years, to now being open-minded and one that's forward-thinking, and that one that wants to foster innovation in the U.S. That's what this Genius Bill represents. Although it's really, looking at stablecoins in general and how to regulate stablecoins, but it shows that the government is trying to open its mind up, right? Rather than trying to develop its own CBDC, for example, which President Trump and others have said, no, we're never going to do that. We're going to embrace CBDCs from the private sector and help them grow and mature and nurture them while not stifling them, right? We want them to be regulated. We want to protect the consumers, but ultimately we're going to allow this to happen. And there's many reasons why they want to do that. One of the big ones is it's going to favor dollar dominance. Actually, Scott Benson, the new Treasury Secretary, came out and said that recently, said that the more people that we get to use stablecoins, especially the private sector, it's only going to help more people use the dollar and treasuries, because they will be backed by dollars and treasuries, right? So there's many reasons why they also want to see this, want to see the Genius Bill succeed and get passed through. But again, I think on a broader scope, it does show that the new regime, so to speak, the new administration, really does want crypto to thrive. And, so short term, we saw a couple stablecoin companies really blow up. Like yesterday, Circle and Coinbase, their stock went up like crazy. We haven't seen so much within the crypto space, but I do think as this bill advances in the House and eventually becomes law, and others that follow it, these will lead to great things. So that's number one. I think the Genius Bill is a big thing. Another one I was referring to was the FOMC meeting, and that happened yesterday. I think it was also very positive. Although a lot of these FOMC meetings, that decide the rates and whether we're going to get rate cuts, They have been boring recently, but yesterday is actually really encouraging because despite the fact that we have a new war to worry about in the Middle East, we have an existing war to worry about in Europe, and also all these new introduced macro scariness, I would say, like for tariffs, nothing really has been resolved yet. These blanket tariffs and all these individual tariffs on different nation states, that's still ongoing. And the U.S. itself, the economy is a little bit shaky. The strength of the dollar has been going down quite rapidly. The bond market is not doing so well, right? And the rates are actually quite high. So what's encouraging about the FOMC meeting yesterday was the fact that Powell said before he wanted to have 2 rate cuts, and he's going to stick with the 2. So despite all the scary macro stuff, he's sticking with 2, which in my mind is very positive. He's not backpedaling. He's not backtracking. He's not saying like, oh, we're going to consider 1 rate cut. No, we're going to go with 2 still. So I think that's also positive reinforcement to Wall Street and others that he's still really serious about cutting rates and helping, spur up the economy, which is good. So we didn't, I think today the U.S. market is closed because it's a national holiday. But if the market was open today, I think it would be very green. But we'll see tomorrow. But I think that's a positive reinforcement also for the remainder of this year. So that's 2. And the third one is about treasuries. And it's kind of hidden because the U.S. has these treasury auctions all the time. And the last few has been quite weak. And they're weak because of all the macro stuff that I've been talking about. So generally speaking, when you have these auctions, it's, I don't think a lot of people really understand what treasuries are, but treasuries are just the way for the US and other countries to borrow money. And when they're coming in weak, that means that people don't want to lend the country money. That's essentially what it means. And I think people are doing that and being more cautious because of what the U.S. is doing with the tariffs and whether or not we're going to get involved with the war and, worried about inflation because of all the overprinting and the deficit, right? As we see more weakness with the bond market, I think it's going to drive people to Bitcoin. It's not an immediate thing, but we have seen several auctions now. They're not like really advertised, but if you search for it, you'll see it. When they come in weak, it tends to help hard assets like Bitcoin and gold. So I think that is something else, that's going to help us for the remainder of this year.
Excellent. And we'll dive into that more.
That was a lot there.
No, it was excellent. And that set a really good tone for the conversation. I really want to ask you now about the extent on which the Genius Bill could be, and stablecoins at a larger level could be a disruptor here, because there were some really interesting signals to just how big of a deal this is. We saw Walmart and Amazon stablecoins, reports that Walmart and Amazon were developing their own stablecoin payment networks. And that actually led to a 5% drop in shares of Visa, MasterCard, and PayPal, kind of signaling the implication of just how significant stablecoins could be at a broader scale if they are privatized and then executed at large. What is your take on just how big of a disruptor this could be, as someone that has been in crypto for so many years, watched markets and projects unfold, and then also get incepted into real everyday life?
Yeah, I think it's stablecoins in general it's a use case for blockchain, basically, right? As a medium of exchange, that's what blockchains, they're good for so many things, and media exchange is one of the excellent things it's good for. And stablecoin is just like, it's a proof of concept basically for that. The ability to transfer crypto, or transfer value, I should say, between any two people, to companies, countries, wherever, and do it without a middleman, and do it with the transparency and mutability and security. It's an amazing thing. Okay, so Bitcoin revolutionized or started this thing, but now we have other chains they're kind of bringing it and involving it to what we're seeing now. So we have other chains that are lightning fast that can transfer really quickly, really cheaply. And again, you get all the benefits of being immutable and transparent and secure, right? So stable coins is definitely going to be a big factor in so many things that we do. It's a medium exchange, so it transfers value. So of course, big giants are looking into it because right now, if you're looking at the global financial system in terms of payments, we're really limited to what we have. Of course, you have like bank wire transfers, but they're costly. You have like the Western Unions of the world that do remittance. Again, costly, slow. Then you have like the credit cards, right? But they're ultimately extensions of banks. But like Visa, MasterCard, American Express, whatever, they charge a high fee, and it's and the commonality of everything I just named, they're all centralized with a middleman. Okay, we need to get approval. They need to approve. They can stop transactions. They can lock up accounts anytime they want to. And this includes even fintech companies like PayPal, for example. They sort of operate like a bank, but they're not governed by banking rules. So PayPal's notorious. Those people that have used it for a long time know that PayPal's notorious for locking people's accounts up and locking up their money. But the premise of stablecoins is now you can escape all that. You could use a decentralized system that no one really controls. That means there's no middleman. Yes, you have maybe nodes or miners that are spread across the world and they're powering the network, but there's not one single entity, single person that can say, well, no, I'm going to shut that down, or I'm going to stop you from sending that. So there's that. And it's so much cheaper. You can send billions of dollars across the blockchain to whoever you want to send it to in an instant and for pennies, sometimes sub pennies, depending on which chain you use. And no one else out there can offer that. Like Visa, MasterCard, you're paying 3% on a transaction, right? And bank transfers, even Swift usage, anything. It's so expensive because these are all private companies that want to make a buck by helping you transfer value from one person to another. Stablecoins removes all that, and there's so many inherent benefits I mentioned that's why it's just so much better. And that's why I think even the big banks, they're afraid. Like JP Morgan and others, they're also afraid too. So they're looking at ways to come up with their own stable coins besides just the big box retailers. Everyone's looking at like, hey, how can I utilize the blockchain to better my business? And stablecoin is a big part of that.
Absolutely. I saw on the X feed earlier this week, there was a small country, I can't remember, but I'll post the link if I can see it in here. And it was a airport store, convenience store, and things were priced in USDT. And it's the first time I've seen a physical store that is not based in the US with not just US denominated currency metric, but USDT. And I was like, wow, this is quite a powerful shift. Over the years of working in crypto, it's like, okay, there's really a huge stablecoin movement at the moment, which is getting past that tipping point of turning back.
Yeah.
Now let's move on to Bitcoin, because you had a video that came out recently, and it was the Bitcoin floodgates are opening, and you were talking through floodgates and also liquidity sources. And I'm curious to get your take on, you've mentioned in the answer to the first question, it was a different action items that were potentially a positive catalyst for Bitcoin, proof that Bitcoin is acting as a macro safe haven. But when it comes to Bitcoin floodgates are opening, can you talk us through what you mean and why this is impactful for the crypto markets?
Yeah. I think it comes down to the fact, if you understand Bitcoin, you understand what it represents and what it is, then you become an investor. You're not a trader. And that's why I think the floodgates are opening, because it's not just for people, but also companies or leaders of companies and leaders of institutions. They're starting to all recognize this, and that's why the floodgates are opening. You could tell, number one, if you want like measurements. I mean, in crypto, we have a lot of metrics, right? And I show a lot of metrics all the time, but let's say you're someone new. You have no idea. You don't know about any of the metrics. You just want proof. One big proof is the Bitcoin ETFs. Okay. Ever since it came out a year ago till now, just look at how much Bitcoin has been bought that went into the ETFs versus how much has come out, right? We're talking about a huge amount of Bitcoin being taken up by just the ETFs alone, from BlackRock's IBITs to Fidelity's to ARCs to Bitwise. You look at the inflow, it's very significant. And generally speaking, who are buying these ETFs? Well, you have other funds, you have companies, for their own treasuries. You have a lot of retail investors, you have billionaires, you have whales, you have everyone, right? You have sovereign funds, you have countries, that are all loading up on these ETFs. So that's one big sign that the floodgates are opening, because you see so many people buy these ETFs, which is just a proxy to buying Bitcoin. So that's a big sign. Another big sign is just look at, if you watch my show, and if anyone watching this is not watching my show, should do so. Every week I'm covering about new companies that are buying Bitcoin now, putting Bitcoin in their treasury. This has never happened before. Outside of really Michael Saylor and strategy, he started in 2020, but even from 2020 all the way up to about 2024, he acquired a good amount of Bitcoin, but it was rather slow. He started slow and small, and then during crypto winter, he kind of slowed things down a little bit, because a lot of people were very afraid of his strategy and whether or not it was going to work for MicroStrategy. And ultimately, after 2021, it has proven that it's going to work. But you look at prior to this cycle, you never really heard about any company acquiring Bitcoin for the treasury. That has changed now. Every single week, I'm talking about a new company now adopting this Bitcoin strategy that Saylor has started. And they're going all in. Some are not just like small amounts. Sure, there are some that are just loading 5, 10, 15 million. But some are going hundreds of millions, and they're raising money to buy Bitcoin, and they're getting the money to do so because investors love it. Another, prime example is Metaplanet now, who's pretty synonymous with Bitcoin and, with the Bitcoin strategy now too, out of Japan. Now they're buying 10,000 Bitcoins at a time. They started out buying just like 10, 20 or whatever. They're buying 10,000 at a time now. They're spending $1 billion, like Michael Saylor. And you're hearing about mining companies now taking out loans, or raising money to buy more Bitcoin. So mining companies aren't just keeping what they have now, they're actually acquiring more. And then you have all these other companies, public trade companies, that are coming out one after another, embracing Bitcoin. So to me, that's also a sign of floodgates opening. So ultimately, what it comes down to is demand and supply, right? We know Bitcoin has a set supply of 21 million. And right now, about 19.7 million has been released out of 21 million. So there's not that many that will be coming out. Everyone's fighting for basically what exists. And you just do the math. When these ETFs and when these companies are buying billions every week, there's only so much to go around, right? So eventually we'll get to a point where there's not enough reserves out there. There's not enough circulating supply out there to satisfy the demand. And we're seeing that now. Otherwise, Bitcoin wouldn't be above $100,000, right? So we're seeing the floodgates open. Now, maybe people interpret, well, floodgates are going to open. That means like Bitcoin's going to shoot up $1 million next week. No, that's not what it means. But it definitely has opened to the big money, the smart money of the world. And they're coming in hard and accumulating so fast. And that's That's what I mean by floodgates opening. So these two are big signs that are happening now that has never happened before in any previous cycles.
And I'm curious to get your take because you've mentioned we are over $100,000 per one BTC. And we have been so for about, at the time of us recording this video, over 40 days consecutively. Do you think this is the end of what we had seen previously in crypto, which was a traditional 4-year cycle?
It could be the end of 4-year cycle well, let me step back. So Bitcoin is governed by the halving event, basically, which happens every 4 years, which is why we've always had these 4-year cycles. So basically, we have 2.5 years of crypto winter where Bitcoin goes down from top, and then we have about a 1.5 year of recovery, and then the blow off top again, right? So that's kind of like the 4-year cycle. But because of these things that I mentioned, institutional adoption, ETFs, and basically more awareness for Bitcoin all around, the maturity factor and long-term holders still being in it and so forth. I mean, if you look at our growth from the bottom, it's not like previous cycles. If you overlay how the cycles look, Bitcoin in the previous cycles went up really quickly, and then they hit a top, like a bubble top, and then they come back down. Right now, what we're seeing is a slow and steady growth. Whereas at times we see similarities, okay? And we still definitely have little volatility dips and so, but we're going up slowly. And, that's a sign of maturity. Bitcoin is obviously much bigger now than previous cycles. There's a lot more money at stake, and there's bigger players, that's in the space. So I feel like the 4-year cycle has changed because we're going to see Bitcoin's kind of price action kind of do this slowly. I don't think we're going to be like previous cycles where we're like, oh, we're going to go top and bottom. I think we're just going to keep seeing like this. And even after this year, this is supposed to be the parabolic year. The end of this year should be the parabolic year. And if we were following a traditional cycle, then in 2026, we go down and hit a bottom. And then 2027, we recover from that bottom at some point, and then we wait for 2028 halving cycle. If this was going to be a traditional 4-year cycle going forward, but I think it's going to be different. I think because of all the buying and all the new holders after 2025, we're just going to continue. 2026, 2027, 2028, we're just going to keep doing this. Along the way, we'll get dips. We'll get the same kind of dips, overbought territory dips, correction dips, shakeout dips, 10, 20, maybe even 30%. But I see us recovering very quickly from them and us not staying in crypto winter for like 2.5 years. I just think that the cycle will be forever changed because of the new players in this space.
Yeah, that makes sense. This is why we have to get you at Binance Watching Week in December of 2025, just to do a sentiment check, see how the markets are looking, and see how we're tuned in. So we spoke about Bitcoin. Now, I would love to ask you about the much anticipated phrase across crypto, Twitter, YouTube, altcoin season. You mentioned the Spot Bitcoin ETFs, and that's been a real game changer for Bitcoin and for the appetite of the Bitcoin landscape. Institutional wrapper, we've seen governments, institutions enter in and add Bitcoin to their balance sheets. Spot Altcoin ETFs, rather, this year we've seen, I think, 31 recorded filings for different altcoin spot ETFs. That's been recorded by the James Seyfarth and Eric Buchanan. And I'm curious to hear from you if it's only a matter of time before the altcoin ETFs do hit the market in the US, what you think the appetite will be like, if it will be similar to the spot Ethereum ETFs we saw launched last year, or could that change the Bitcoin dominance 60% stance that we have at the moment and bring on a potential rally or change up in the altcoin market?
So this cycle has been very different. It's different yet similar because normally altcoin season starts at the tail end of a cycle, which means that in theory, it should be coming later this year, regardless, right? But it usually happens when Bitcoin hits the top, then money flows out of Bitcoin and into the alts. That's traditionally how it works. And it usually does that, it starts probably 3 months before the end of the cycle, and it really accelerates until like the last few weeks. That's when things get crazy. And then you have a cycle top and everything bursts. But this cycle, I think we've seen it. I think we think that it's different than previous cycles because the alts are looking weaker and weaker and Bitcoin dominance is getting stronger and stronger. I think a lot of it is just due to the slow rise of Bitcoin too. Because Bitcoin isn't just doing this, it's going like this. So while it's doing this, alts, the money into alts are just not there. And we're not seeing people, long-term holders of Bitcoin, sell off their Bitcoin for alts right now. And institutions, they're all putting their money into Bitcoin, right? So the alts are relatively weak. Now, to your point, we have a lot of these altcoins, they have pending applications for ETFs. And I think it can help them in a bull market. Because like right now, for example, ETH has plenty of ETFs. It hasn't really helped it be stronger, right, during our time right now. So I do think if we do get like the Sol ETF, which I think is next, and then XRP ETF or right be after that, and then we may get like a few more this year, but I think at a minimum we get these two. I think it really depends on the market conditions. If the market is hot again, these two will be these two will benefit enormously from the ETFs because you're going to have hundreds of millions to billions of dollars from Wall Street flowing in. But if it's during a bad or like a rocky time or volatile time, I don't know if the ETFs are going to do that well. I have an interesting theory. It could be crazy, but I see altcoin season actually started by I said, altcoin season starts at the tail end of the cycle, mostly because money flows from Bitcoin into alts. I see this year's altcoin season started by like the explosion of memes. I see meme coins, they have to get hot first. And once the money's in meme coins, then money flows out of meme coins and goes into the alts. That's kind of how I see where the money's going to come from. It's not going to be from Bitcoin's top. It's going to be from meme coins top, right? This cycle is also very different because you have so many memes and so many of them became huge, especially, this year when we were going up a little bit, we had kind of like a mini altcoin season in January and February. And that's when we saw all the memes explode. I think we're going to see something similar. And the chains that house the most and biggest memes will be the most beneficial. And the meme money will go into alts. That's kind of how I see it. Of course, there's going to be some money from Bitcoin flowing into the alts, but I think most people that are in Bitcoin are long-term holders. They're not going to be selling it for alts. So it's really, the money has to come from somewhere. So I think it's going to come from memes. So I don't know. That's just my theory about this whole thing.
Interesting take. And I have to ask, because we have a lot of new investors that watch the channel. I think a lot of people that are getting into crypto or, just looking to level up a little bit. You've mentioned there are rotations, so money that moves into meme coins and then will rotate into alts and then possibly into the next asset class or category. If I'm a new retail investor, how do I identify when the money is moving in? Is it as simple as number go up, or is there other metrics that I can look for that can help me show where the money is moving and maybe when it's starting to rotate into the next thing?
That's tough. Like I sometimes don't even know. I think it's just you just gotta look at the prices. You gotta read the room. Like for example, back earlier this year in January, February, I mentioned Solana, for example, broke through its 2021 high and made a new high. I think it topped out around 265. And if you're coming in, you may be wondering, well, why was Solana so hot? Why was it going so fast? Well, it's because most of the big memes at the time, they were on Solana. That's why. So people were buying Sol so that they can, buy these memes, and they need a Sol for the gas fee. And, that's the reason, right? So sometimes you just got to pay attention. You got to read the room, so to speak, and pay attention to the landscape and kind of figure things out. If a chain is exploding, why is it? Is it just like a whale pump, or is there something more to it, right? And right now, like for example, the memes are not very hot. That's why Solana's not very hot. But to your point, like how does a new person in the space recognize this? I mean, there are a lot of metrics. If you follow a few people on X, and we randomly publish this as well, like there will be institutional inflow into some of the chains, into the major chains. And I'm sure there's like metrics showing volume going into chains as well, but they're hard to spot and they're not always published. And some of these tools are very expensive too. So I think it's just, as a retail investor, you just have to be in the space. You have to take it all in. Just like any other investment out there, you got to do some homework. I think a lot of people come in every cycle towards the top because, they're basic gambling. They're seeing how everyone else, or seeing or hearing everyone else making a lot of money, and they don't realize that they may have been in a space for a while. They've done the research, they hodled, they DCA'd, and now they're making money. A lot of people don't see that. They come in and it's like, I'm just gonna pick whatever's going up the most today. And then tomorrow it dumps, and then they get mad, and then they leave. I think you just have to stay in the game for a little bit and look around, pay attention, do some homework, and then, make your own assessment on what you want to invest in. That's it.
That is a final fantastic note to leave it on. George, thank you so much for your insights. I am going to, for everyone watching, leave the links to George's channels as well, so you can DYOR, but also check out George's channels too. George, thank you for the time today. It was great to catch up and to speak. Finally, it's been a long time coming.
Yeah, this was fun. Thank you, and great questions. And I hope we can do this again in the future.
Absolutely, for sure. Thank you so much. And guys, thank you so much for watching. If you've not yet subscribed to the channel, do make sure to do so you don't miss the next one.